In Kenya, there was quite the sell-off in assets today, shortly after the results of the August 8 presidential election were nullified by the country's Supreme Court. The main index, the NSE 20, that was down by nearly 3.5% today. 3,887.28 points was a relevant number there. Yields on Kenya's 10-year Eurobond, that also spiked by at least 20 basis points to 6.23%. Key index components like Safaricom were hardest hit, with the country's two biggest banks, Equity and KCB, closing the day 8.6% and 5% lower, respectively. Right then, so there has been an economic cost to the political events in this country over the course of the year. Let's dig deep into what exactly this particular ruling means for the rest of 2017. Sunil Sangha is the CEO at Orion Advisory Services. He's with me in studio today. This was one hell of a trading session, wasn't it?
Yes, it was. I think the market was completely caught off guard by the ruling from the Supreme Court. I think the overwhelming market expectations were that this was just a process, and the IEBC, the results as announced by the IEBC would be affirmed by the Supreme Court.
So basically they were expecting 2013 again.
Yes, something similar to what happened at the last elections. And I think the markets had been rallying quite sharply after the election announcement, on the basis that things that the election was now behind us, and we could get on with economics. So I think the result when it was announced just after 11 came as a huge surprise, and as we saw, there was immediately a big sell-off. As you pointed out, the NSE halted trading for about 30 minutes shortly after the results were announced. As per the trading rules, the trading can be suspended at the Securities Exchange when the market falls by over 5%, when the indices fall by 5%. Yeah. But I mean, I don't recollect an instance where trading had to be suspended at the NSE. Yeah,
because mostly it's usually for specific counters. If you hit the 10% circuit breaker, then we'll stop trading for about 30 minutes in that counter. But a market-wide one.
Yes, a market-wide trading halt, at least in my recollection, this is the first instance.
Right, but there is a fundamental argument to this, though. I mean, if you're looking at these big cap banks like KCB and Equity, they've basically been shredded today. But how much of the concern there is the fact that, one, we've had rate caps for the last 12 months now, GDP growth from the first quarter was particularly bad, and all the leading economic indicators are looking at points to a slowdown in spending and investment. Isn't there fundamental concern here that that decline might actually just continue?
I think so. I mean, if we look at it, the markets have been up about 27% since the beginning of the year, and about 38% from the low in sometime in March. That itself, I don't think the economic fundamentals justified this kind of a run-up in the elections. And after a 38% rise in the market, a correction was due. Now, I think this is the trigger for the correction, but we would have had a correction nevertheless. Maybe not so sharp and not so much in one day, but I think with the kind of rally that we have seen in the last 4 to 5 months, a correction in the market was anyway due.
Because a lot of, I mean, if you look at price to book ratios for a lot of the counters, some of them are completely out of line. But let's talk about the wider perspective. If you're an investor and you're looking at this ruling, surely it should be a net positive for Kenya, because some would say, well, it's proof institutions are independent and they are working. Yeah.
Well, for the short term, it's definitely a shock to the market and a shock to the system. So the market reaction is not unexpected. I think when people have a time to go back and digest this, I think investors, particularly long-term investors, institutional investors, should view this as a positive. I think it shows that the rule of law and the constitution in Kenya is supreme, and it really sets Kenya apart and sets Kenya as a shining beacon within Africa for a country where the rule of law prevails.
Right, so pretty much.
Yes, definitely. For the long term, it should be viewed as a positive.
Again, back to that whole banks thing, because I'm still stuck on the way banks have rallied over the last 12 months. KCB up 65%, Equity 49%, National Bank, despite all its governance shenanigans, 61% up. I mean, why are investors so bullish on bank stocks this year, especially considering the fact that on one hand, they're looking at, just looking at the half-year numbers, net interest margins, much lower, profits, much lower, lending, much lower, provisions for bad loans, all of that has gone up. I mean, it seems like investors are ignoring every fundamental data point coming from the market.
Yeah, well, I think when we are talking about 60 to 65% increase over the last 12 months, we should remember that the interest rate capping came in August last year, and there was an immediate hit to the stock price, to the prices of bank stocks. So we are starting from a low base. So to that extent, that is partly the reason for the increase.
No, but sure, it doesn't explain everything. I mean, 61% on a stock like National Bank, with all its government shenanigans, surely it shouldn't actually be up by this much money.
Yeah. Well, I don't want to comment on specific bank stocks, but definitely the outlook for banking stocks is mixed. On the one hand, listed banks have been increasing their market shares over the last 6 to 9 months, particularly on the deposit side, at the expense of the smaller, the mid-tier and smaller banks. And this is a result of what had happened with 2 or 3 of the banks which closed down. On the other hand, NPLs have been rising across the sector. The bigger banks are no exception. So it's a mixed feeling. I think a lot of the increase that we saw over the last couple of months have been on the expectation that the interest rate capping regulation will either be scrapped or will be relaxed to some extent.
But of course, given this particular result, that decision again
that decision has at least gone off by a quarter. And I think even without this setback of 3 months, at least on the change in the law, certain banking stocks were starting to look overvalued. So I would not be surprised, and I would expect to see banking stocks continue to weaken over the next few weeks.
Wow. Okay. We'll have to leave it there for the time being. But as always, Sunil, thank you very much for your time.
Thank you, Ram.